All I can say is wow, and it's hard to believe. We just received a report that the United States is spending on its exploding national debt $2 billion in interest payments every single day. The national debt, which no politician has the real backbone to go after, it continues to explode. I think recently we just hit what, $33 billion, 33 trillion, excuse me, as it continues to explode, and it's accelerating. And the idea that every time an election comes up, it's a talking point. We need to do something about it, blah, blah, blah. And no one ever does, is one of the reasons that I get very, very concerned about the future of the country, the future of the economy, the future of the stock market. And I tell you right now, and I make no apologies with this statement, the future belongs to those who know how to use the stock market, given what's coming. When you receive a prospectus to invest, what does it say? They all say the same thing. It's legal talk. Past performance is what? Come on. No indication of any future, returns. It's just what's happened. And yet the same people that give us this prospectus on any stock that we're looking at, citing past performance, ask us to believe that the next 10 to 20 years for Wall Street, the economy, the country, is going to be like the last 5 to 10 years. And I'm the kid in the back of the class raising my hand and say, excuse me, what about underfunded pensions with a lot of people preparing to retire? What about the regional bank issues that are still out there and a very real concern? What about this exploding national debt that no one wants to talk about? Debt's bad. If you're a family, if you're a city, a state, a country, I mean, it's bad. And what was the numbers? Through August of 2023, we've spent $808 billion in interest on our national debt. That same period of time, January through the end of August, $695 billion on defense. So $808 billion interest through the first 8 months compared to $695 billion for the Department of, not the Department of Defense, but defense-related items in the budget. More on interest than we do on defense. Oh, and let's not forget the coming time bomb of Social Security. Folks, there's no way that and I'm not an alarmist. I'm not someone out there who's saying the stock market's going to crash or any of these other kinds of things, but I am saying that there's a lot more challenges moving forward than what we've had in the past. And I'm one of these individuals that feel like we'll see a dip, correction of some kind before the stock market sees 40,000. Now, that may not happen. We may see a nice little run. It may go back up, establish new highs, hit 40,000, we throw a party. But I can't see that given all of the issues that we have at play right now. Now, I'll be the first to say, and I agree with it wholeheartedly, that there's an obvious disconnect between Wall Street and Main Street. There always has been. But eventually they catch up. And I think it was last week, the stock market went negative on the year. And October is a scary month. When you're trading stocks in October, I think the Halloween, Friday the 13th music should be in the background. Because I'm telling you, with Michael, with the mask, the whole bit of it, if you will. Because October is a scary month. You look at the top losses from a percentage standpoint. We don't worry about the point drops. That's not the proper way to really understand how the market's moving. We always look at the percentages. And the top 20 percentages, if you look it up, 9 of the biggest single day drops from a percentage standpoint have happened in October. That's not a fact that's lost on investors. So when you start seeing a little bit of heightened volatility, a lot of these reports, the idea that the Fed's going to keep jacking interest rates, and I think we've got at least one more coming our way this year, folks, it's a scary time. And that's one of the reasons that I'm urging people, whether they use day trade fund or not, learn how to use the stock market for quick catch and release profits. We grab and hold a stock for 20 minutes on average, we're done with it. We make our 5, 6, 8, 10%. We're done. We move on looking for the next stock that can give us a revenue opportunity. This idea of buying a stock, the buy, hold, and pray approach, not for me. And there's a big time difference, I understand, between investing and trading. But if you have a $1 million portfolio, and I have a $50,000 portfolio over the course of 10 years, my $50,000 portfolio using that catch and release program for a decade versus you just taking your hands off the wheel. Let whatever happens, happens. I'll make more money than the profit you'll make on your $1 million portfolio. And how much of my money was at risk? Small bit of portions of that $50,000 portfolio. We diversify, as you should, long term, or if you're going to buy stocks and flip them for quick profits, as we do. My money's exposed to risk very, very little. Somebody that leaves their money in the market for an extended period of time, your risk is 24/7. If some war breaks out, some pandemic, and all of a sudden, boom, the market drops 20, 25 points or percent, your $1 million portfolio is now worth $800,000, $750,000. How long is it going to take to come back up? Well, recently, Jay, it's not taken long to recover. Totally get it. But I can also say times in the last 30, 40 years where over a decade, the market barely moved. A lot of people think just because the market's dropped, it's going to quickly come back. That may not be the case. And when you see this news that we're spending $2 billion a day on interest payments on the national debt, and nobody seems to care, it's scary. And that's one of the reasons that I beg you and urge you to be prepared. This is a storm that we can see coming from a long distance. The people that are prepared are going to be able to not only weather the storm, but be able to thrive during it.